Hello, my name is Kurt Worley. I am the quantitative analyst at fxbootcamp.com. Today is Tuesday, February 23rd, 2010. This is your New York session video technical briefing. It's a video review of some of the price action we covered in the live class today at fxbootcamp.com during the New York session. Now, before I get started, I'd like to request your feedback on this video. Whether you're watching this video on FX Bootcamp's YouTube page or on our Facebook page, or possibly from a link on FX Bootcamp's Twitter page, or even on our blog, please leave a comment when you are done watching this video. Even if you just say hi or thanks, I would really appreciate that. Now I'd like to clarify that the purpose of FX Bootcamp is education. This is not an alert service. The currency coaches do not make trade recommendations. However, we do provide real-time technical and fundamental analysis to help you put together your trade plans throughout the day. We assume that our new bootcamp members are trading on a demo account, so that regardless of whether or not any particular trade plan is successful, they will certainly have an opportunity to learn and eventually trade their own live accounts for years to come, both profitably and independently. What you now see is a view showing 6 charts without indicators as those charts looked at 10 a.m. New York time. Now, that was the scheduled release of the Conference Board's U.S. Consumer Confidence Index for the month of February. The release of reports which publish an index meant to reflect the relative confidence level of U.S. consumers. Those reports can increase volatility in the financial markets. Let me say that in a simpler and even slower way. This report can move the markets, especially when the headline number is a surprise. I've been saying that for months in reference to these reports, and I said it again today during the live class at FX Bootcamp. So, what we were looking for at this point in the trading day was a news gap following the release of the Conference Board's report. Now, prior to the release of news, I typically switch to a view similar to the one you're seeing here. The idea is to scan the reaction to news among multiple currency pairs and identify a pattern, if any, identify a pattern in that reaction to the news. If, say, the Japanese yen shows weakness against multiple other currencies, you might look to pair the Japanese yen with a neutral or strong currency and set up a trade plan on that currency pair. Now, before we get to the news, a quick comment on these 6 charts. In the upper left is a 15-minute chart for the euro pound. That's what you see in here. Now, that pair has been dropping for about 5 hours now, down for the euro pound. I'll use that information later in the video. The rest of the charts you see here, the other 5 charts, are 1-minute charts, and you'll see which charts go with which currency pairs in a minute. For now, just note that these are major currency pairs which have been trading in a roughly 15 pip range during the minutes leading up to the U.S. news. At 10 a.m. New York time, we got word from Trade the News that the Conference Board's Consumer Confidence Survey produced a 10-month low in its main index, well below the range of analyst estimates, and the biggest nominal difference between actual and expected in a year for that index. And if that wasn't enough, the FDIC, the U.S. FDIC, announced at the same time that their list of troubled U.S. banks grew by more than 25% during the fourth quarter of last year. Now, if recent patterns hold, a typical response to such poor U.S. news would be a drop in the major U.S. stock market indices such as the Dow and the S&P, and a rise in treasury prices. Now, such moves suggest rising risk aversion, and in that environment, the Japanese yen and the U.S. dollar tend to gain strength, maybe to varying degrees. Let's see how the currency pairs responded. Focusing now on the 5 1-minute charts I mentioned earlier. Roughly 10 pip candles on the Euro USD and pound dollar. That's a pretty tame response by the dollar to any major U.S. news report, at least any major surprising U.S. news report. Contrast those moves on the USD pairs to what we're seeing on the yen crosses. Dollar yen, 25 pips down in about 1 minute. 35 to 40 pip drops for the euro yen and the pound yen. So down for those currency pairs, the dollar yen, euro yen, and pound yen, down for those currency pairs means yen strength, which is one of the common patterns in response to sour U.S. news. Okay, great. So you have a case for seeking to buy the Japanese yen. Now, what do you buy it against? Remember the euro pound move I mentioned earlier? Euro pound down suggests that the euro is weaker than the British pound. That points you to the euro yen. the euro yen right here to plan your new scalp. Now what was interesting about this setup, focusing now on the euro yen 1 minute chart, what was interesting about this setup on the euro yen was that this pair just broke below its prior low for the day, which I've identified here with the horizontal gray line, prior low at 122.85. That low was established about 20 minutes before the release of this news. Now that prior low at 122.85 suggests what was earlier a level of support, which now might become a level of resistance. By the way, another source of prospective resistance here would be a Fibonacci level of this post-news move from the swing high here at about 123.10 to the swing low here just above the daily S2. Nice. The small horizontal red line represents the 38.2% fib retracement level of that move down from a swing high at 123.10 to the swing low, the post-news swing low near the daily S2. That red line overlaps perfectly with today's prior low, again established about 20 minutes ago. So a double dose of much worse than expected U.S. news, initial yen strength across the board, and a classic combination of Fibonacci retracement and role reversal combined. That is ample justification for taking a shot on a short trade at 122.85. If you entered at or just below 122.85 during the next 1 minute candle, which is right there, so your entry is right in here, again 122.85, you might have initially positioned your stop loss 50 or more pips above, again 50 or more pips above your entry for catastrophic protection purposes. And one example of an exit strategy would be to take a very reasonable loss of roughly 20 pips if the euro yen breaks back above the combination I'm circling now of 123, the psychological level, and the 78.6% retracement level of this fib study I've already drawn, the 78.6% fib represented here by the horizontal purple line. About 2 minutes after your entry, and you are some 20 pips in profit, and this pair appears to have broken below its daily S2 pivot point, represented here by the horizontal green line. That's a reasonable time to move your stop loss to either the break-even point or maybe a few pips above your entry. Moving now to a 3 minute chart to see how this move plays out. At this point, to some 15 minutes after the news, you should be thinking that price action could evolve into what is a relatively common pattern, where the first phase of the pattern is a big initial move. I'm talking about this drop from around 123 to 122.40. That would be phase one of the move, and a phase two. Since the initial move was down, the phase two would be some sort of descending channel, which may be starting just about like that. Continuing forward in time, 3 minute increments. The euro yen continues down, basically riding the 5 EMA on this 3 minute chart. First logical profit target was the weekly M1 pivot point this week at 122.11. After accounting for spread, that move from entry down to the weekly M1 was about 70 pips. For the next 90 minutes, the euro yen goes up, the euro yen goes down, but finds itself back at the weekly M1 at the London close, represented here by the vertical red line. I'd say that today's outstanding currency award goes to the Japanese yen. Again, my name is Kurt Worley, and this has been your New York session video briefing from FXBootcamp.com for Tuesday, February 23rd.